March 17th, 2026. Today in the market, we had a continuation of buying pressure. Buyers are stepping in, not on high volume though, so we still have a negative daily bias. We are still anticipating the price action to continue consolidating and moving downward until we see a volume confirmation with increasing momentum and a break above this 84 yellow EMA here. Until we see those three things happen, then we're technically still consolidating downward. And let's go over the trades I took today and talk about what went well, what didn't. I hope you're doing well. And look, if you're trading to make money, you're crazy. And you don't have to be crazy, but it helps if you're a little bit crazy. It does help. My first trade was right here at 8:46 a.m. in the NASDAQ. Why? The higher time frames are all aligned, which is what we look for. 2 hour here, we got the 30-minute alignment going on here. We got a 15-minute alignment, perfect alignment going on. 5-minute, completely perfect, unbroken. So everything was setting up nicely, and then what do you see? On the 1-minute chart, everything's going up, but on the 1-minute chart, what are we doing? We're going down. Interesting. I wonder what's going to happen when this starts to go up with a volume confluence. So right here, we see the volume tick up, volume confluence. We see the momentum tick up. So that is the entry signal, specifically on a 1-minute chart because we're at the beginning of the market. So my entry was right at the close of the candle, slightly before the close of the candle, and then put your stop loss slightly below that candle or at the edge of the candle. Depends how you're feeling. Depends on how big the candle is. It depends what's happening. And that target was hit, so that was a win. And that's not a 2-to-1 ratio that I use. It's slightly better than a 2-to-1 ratio. It's actually considered a 1 to 0.61 ratio. That's the actual ratio that I use as a standard. And what that means is that we are risking $1 to make 61 cents with the ability to have some runners continue running. So to have that strategy be profitable, you have to have more than a 50% win rate. You got to have more like a 58 to 62% win rate to even be okay. And then if you can get 64 to 74% win rate, you're doing really good. So that was my first trade of the day. That was a win. There was other opportunities I could have taken today that I did not because there wasn't really a full alignment. What is a full alignment? Full alignment meaning we want all of the histogram, we want all of the momentum to be going down. So here, look, the 30-minute histogram is now going down. The 15-minute is crossing over into the red. The 5-minute deep into the red. And what do you see here? What do you see? You see anything interesting? What do you notice right here? We get a tick down on the histogram, the momentum. We get a volume confluence. That's the entry. Now, because we're in the middle of the market, we're approaching the middle of the market, not really quite yet. You would use a 2-minute chart mostly to smooth things and to make it a little bit clearer. And look, we still see the same entry signal. 2x3 volume confluence, momentum ticking down. So that would have been another solid win right here. So those are the alignments we're talking about. There was another alignment that occurred right here. What do you see? A volume confluence occurs right here. Volume confluence. We're on the right side of the momentum. The 5-minute is working down at this point. 5 minutes are working down. The 15 is in the red, and the 30 is still working down. So that's a weak alignment, but it's still an alignment. My last 2 trades of the day were in the last like 15 to 20 minutes of the market. And the first one was a loss right here. I was expecting this to continue going down. Why? The 5-minute was giving me signs that we were going to continue downward. The 15-minute was weak, not going with the trade, not expanding downward. It's actually expanding upwards. That's weak. But the 30-minute is in the red now, so that's a very strong force. So I saw this volume confluence, and I was like, surely this is going to keep going down if I enter right here. on a 1 minute, surely we'll be able to make a profit. And we did. Look, enter at the close of the candle, stop loss slightly above. look, this profit was hit, this profit target right there. Now, I didn't capture it because had this been futures, had I been trading futures contracts, this would have been easily winnable. But because there was a little bit of slippage in TQQQ shares, I actually didn't get the win. It's a good lesson to think about. So the setup was nice, it just wasn't a win. And then finally, last bit of the day, I saw this huge, this is the literal last 10 minutes. I saw this huge candle selling off. So I literally traded just this candle. So I entered right here. Let me make this visually understandable here. I'm going to denote this red line is going to be my entry. So I saw this candle lighting up. I saw the volume confluence occurring right here. I didn't use anything else. I was just using my intuition. This is a discretionary situation here the last 10 minutes of the day. So it started selling off, and as soon as it got about right here, I entered the trade as a short because I saw it heavily selling off, and then I took my profit right here. Just as a nice little discretionary scalp. You'll find that the last 10 minutes of the day produces only a few patterns. It's like kind of the same thing that continues happening. You can judge the energy based on the volume and the momentum. You can sort of start to judge it. So with all that being said, oh, and a quick recap. Remember what happened yesterday? Yesterday we had an interesting scenario where we had a huge spike, popped up, immediately rejected off of the previous market day's high, which is the day before this one. So I said, watch this level today. Remember when I said that? Watch this level today? Let's go back and see if that level would have helped us out today. Let's see. Okay, so we open. We are penetrating. Look, hit that level. Come back. The market opens. We penetrate through that same level with force. A lot of force. You see how that's a strategy? You enter here. Or even at the break. You could even enter at the break. Stop loss slightly below. You see how this is a winning strategy? Do you see how those levels come into play? Very important. Look how this level played with the price action throughout the day, by the way. Look at this. Look at that. Isn't that interesting? Isn't that interesting? Well, I'll see you in the next one. Take care now.